lot of action in the market, huh?
A lot of action, a lot of insanity. I mean, if you saw what happened last night.
It seems like Goldman Sachs will hit their numbers, their expectation.
I don't know. It is. I mean, it was very interesting that they were able to actually get the or above expectations.
Yeah.
And also even pre-market was still up like over 13% today. Nvidia so far pre-market, we are up by how much?
Same as we were saying yesterday, actually.
That is still holding. It's even higher than yesterday. Yesterday we closed the pre-market at 735. Now we're 767. So between the close of yesterday and today, total up, we're 14% up after earnings. 14%. Not too shabby.
Yeah, the positivity in the market is crazy.
It's crazy, but at the same time, it's kind of a little bit kind of concerning too.
Well, okay, it can be considered as concerning, but you can't deny the fact that these are the only options that we have currently in the market, right? Like if someone has the money, where would you go? What would you do? Where would you put them?
Yeah.
You have a lot of problems around the world between geopolitical tension and the real estate issues around the world. If you put them in a single stock, you might be okay, right or wrong, but the percentage of hitting that is a bit different. So people are trying to diversify, I think, as much as they can, and moving from the mentality of an investor to a little bit more of kind of like trader. This is what we've been feeling, at least here in the region and Squared lately. So we have
Here's
more
my issue with
than investors, than proper investors, like long-term investors.
Yeah. Here's my issue with everything that is happening, basically. The other day, Goldman Sachs, Morgan Stanley, some other like big banks, they mentioned something very interesting, which is the increase of retail investors, which is basically this basically happened after the market went up to record high, which is usually, I mean, it's kind of concerning because, you know, when everybody is on the same page, unlike what happened last year, everything was in a totally different. But yes, earnings are good, but is it good for everybody? That's one. But Nvidia, let's say as an example, Nvidia did definitely at least proves that that AI is definitely can create a new stream of revenue. And that was basically in their numbers, that was clear in the numbers yesterday. But at the same time, I mean, if you ask me, I'm definitely sure most people would ask this question now: what would I do with Nvidia? What would I do with Amazon? What would I do? Would I actually buy here? I mean, that is not actually a great idea, especially, I mean, it could be a good idea, could be not. But for me, why would I even think about buying, let's say, as an example, hear me out. Would you buy a stock that is actually already went up by 250% last year, and since the beginning of the year until today, it's up above more than 45%?
Yeah. Or would you buy, let's say, NEO?
Yeah, something that is already went down a lot.
Yeah, exactly.
Or would you buy China? Or would you know, that's kind of thing. But just try to jump on what is happening today, or try to jump on the market today. I mean, I can jump on certain stocks, but not the ones at record highs. I mean, why would you buy at record high? Well, last year, if you look at Nvidia last year, we went all the way down to 100 in October 2022. Nvidia was $109. $109. Today, That's a record high today after pre-market, $766.
Agree.
So yeah, so that's my problem here is like,
Yeah, but take a look at something else. Like, see, like try to understand. Because from the discussions that we've been having with the clients, what we
yeah,
noticed is that the mentality has changed since Corona. The fear of missing the opportunity is something that is kind of like built in now in the mentality of the
mhm,
people. So and that's something that is concerning at the same time. As you were mentioning, right? Like for us,
yeah,
it is concerning, but for a client or for someone that is looking for an opportunity, he is fearing just to miss that opportunity. That this is one.
mhm,
Again, look at it from a different perspective as well. Take a look at the all the new the nouveau riche, let's say, and the ones that are trading they're trading the cryptocurrencies and the shitcoin and if I have 10K I want to spend, okay, go and distribute it on 1,000 or whatever coins that no one have ever heard of, or I don't even have a clue what they do. And if I get
mhm,
lucky, I'll be a millionaire in the next couple of years. That mentality of the lottery and the mentality of someone that might get and becomes a millionaire overnight or over a year is kind of driving the people nowadays. So even if it's at the high and it does not make any sense for both of us, still
mhm.
you can find some people where you can sit and discuss with them and you'll be shocked and
Oh
they'll be
yes,
like,
and it's,
they will convince you and they are fully
yeah.
convinced that it's the right thing and this is what they should
Here's
do.
here's again what bothers me, or what bothered me the most last year. Everybody wanted the market to crash. Yes, we did go down about what around like 30%. But at the
Yeah.
same time, there's a lot of people missing the point that they wanted almost the same crash as what happened in 2007, 2008, which when the market crashed by 50% or even more. But if you look at the adjusted inflation, the 30% that we went down last year could actually equal to the same 60% that we went down in 2008. So when the market started to kind of like recover and people was like, no, we're going to go back to, we have to go back to October lows. The economy is like very weak. Inflation is still on the rise and so on and so on. But now after the market, and they kept even, don't forget that most of the rally that happened last year was a short squeeze. And the end of the year, the fund managers who were basically, they did not participate in the market throughout the year. They were basically forced to put some money into the market just because they needed to move their funds or to move the accounts. And this is basically what happened at the end of the year. And then we saw 15 weeks of consecutive gains. But convincing the people here not to risk as much on a stock that is already at the high, up 7 times, not 7 times, 700 times, is definitely something different. Let me just say, also, let me just say like hello to everybody again for joining us today. But here, we'll take all your questions, whatever. If you have any questions, you can either like type it in the questions, or you can raise your hand, or you can also type it in the comments below, and we'll answer it as we go along. Will the magnificent Magda, will the magnificent 7 holds in the second quarter? What do you think, Dom?
Well, the second quarter, okay, now we need to link it, I think, to whatever the Fed is gonna decide, because eventually it's all interlinked, right? And from whatever we've seen yesterday from the comments and from the previous meeting with Powell and his statement, I believe that the view didn't change. We've been discussing that, both of us, I think, over the past few months, that before the mid of the year, there won't be any proper change, or the Fed wouldn't interfere unless they see the change properly in the market and the right data and the inflation decreasing to a certain level where they feel very comfortable because they don't want to do the mistake that they've done before. And we've seen the Fed making such mistakes before where they interfere and then they pull back. And that creates uncertainty in the market. And that uncertainty will basically, they will lose the trust of the people. They will lose whatever the investor, when Yellen or Powell or any a reputable person just goes online and says something, they won't listen to them anymore. Like at the beginning of Corona, where we noticed that they kept on saying this is a phase where it won't last and all these. So they lost the trust of the people. So now that's the same thing happening now. They don't want to do those mistakes again. I believe that after the second quarter, like when the second quarter ends of this year, more clarity will be on the market for the next 3 months. We're going to see, or even 4 months, we're going to see a bit more stronger numbers, a bit more real numbers without changing them after we release them every now and then.
Yeah, there was something last week or the week before.
Yeah, exactly. So I think they will keep on holding for the next few months or maybe for the short period, but it wouldn't be a very interesting investment versus the risk, because when we want to trade or even do an investment, we need to always think about the risk that we're taking here. There's a big risk. There's a huge risk involved, right? So the risk reward ratio would be crazy, and that would hurt any portfolio and won't allow you even to diversify or even to average down if the market collapses or even does any correction. Because from where we are here at the moment, if the market start correcting with the fear of the recession hitting a bit more in the US, and if there's a possibility that we might see as well a panic, let's say a short-term panic. I'm not saying it's going to be a crazy panic, a short-term panic. That would hurt the portfolio in a big way, where I would be stuck, and any investor or anyone that would seek an advice wouldn't like something like that. So because of that, I believe just follow the trend and be very careful at the moment. This is what we should do. Just some hit and runs would be amazing. If we want to invest in something a bit to the long term, it would be nice to take, as we were discussing a few minutes ago, like some stocks that have the value, they have the strength, and they already declined for 50, 60, 70%. And we understand that this is the future. So eventually this is something where I would invest and keep for the next, I don't know, 5 years, 4 years, 10 years, like the Warren Buffett style, not the style where I'm going to do hit and runs. The hit and runs, I can do them weekly, monthly, daily. It doesn't matter.
I actually hate the hit and runs. Kind of. I can not hate them, but it's kind of like it's a different style of trade. But I mean, as I said, yesterday's FOMC, we did not actually get any kind of like new information from the Fed. I mean, it was old news, except the one thing that they talked about, the discussions about trimming or unwinding the balance sheet that will basically come in with they will come up with a decision about trimming it. And this one of the reasons why also we were saying the dollar down across the board today is basically markets kind of like starting to think, okay, well, the Federal Reserve is not going to start cutting rates, but they might have to start trimming their how they are unwinding the balance sheet, which is kind of like not a huge deal, at least until the announcement. But back to Magda's question, if they were able to hold or not, here's the one thing that you have to keep an eye on over the next a few weeks. We heard a lot of layoffs from a lot of tech companies over the past few days too. So basically, going forward, don't forget that the interest rates, when they raised interest rates and then they kept it steady for the past 4 or 5 months now, this is when basically it will hit across the economy. So we should be starting seeing some sort of like any kind, or at least some sign of, slowing down. Yes, inflation did slow down. It didn't decline. It did slow down. But now we have to see if corporates will be able to handle such higher interest rates for longer, because markets also, don't forget, markets were actually pricing in at some point at the beginning of the year. Everybody was talking about, the Federal Reserve will eventually start cutting rates in March. And then now March probability is only 1%. And then in April, it used to be like over 180%. Now it is less than 30%. So now the talks is basically about June. But from now until June, there's a lot of things involved. But I would say again, they might be able to hold if they showed that all the earnings from this Magnificent Seven shows actually some sort of like a genuine, like a great growth. Because also don't forget the fair value of, according to the formula of the fair value for Nvidia is about like $190, and now it's trading at 700. So that keep that in mind too. That is one thing. We have Hannah. Afternoon, gentlemen. I'm a business student, and I was wondering if you guys had any advice for me as to what to focus on through my college years. Thanks in advance. Okay, what are you looking for a specific, you're looking for something in the markets or like in general?
Are you looking for something like where do you want to study for the next, or what do you want to study for the next few years? That's the idea, or what are you looking for?
No, he's a business student, as far as I can think.
Well, listen, I believe that the business, if you want to get or study a bit more finance and anything related to investments, that's something really interesting for any time, if it's 20 years ago, or maybe for the next 20 years ago, or for the next 20 years, basically. But at the same time, you cannot deny the fact that now the technology is taking over with the AI, with the mentality of the people, and the way that we're using the technology nowadays. So that's something that you cannot you can't just put it on the side. So you have to always think about that at the same time. So anyone that would like to study, and the same way I think that we deal with our kids and family, so we always try to tell them, okay, be careful, this is gonna change. So to be able to develop at the same time and continue with the growth, you need to adapt. So that adaptation is something really important. Same way as we've seen over the companies where Kodak couldn't adapt properly, or even Nokia couldn't adapt properly, or they couldn't take a proper decision at the right time, although they had all the files in front of them, but they couldn't take a decision where to go. Let's say for Nokia with iOS system or with Android. So those decisions are very, very important. As long as you're moving forward, this is something that is amazing.
I would say also to add to this, that I think if you're asking about, like, since you're like a business student, and if you're wondering what advice on what to focus on, if you want to be in the market, I would say practice is your best option. Practicing the market is even better than just reading the theories, because everything you read in the books is kind of hard to be like the same in reality. This is not a thing, because if it was, let's assume, as one of the one that recently, basically, when inflation goes up, you raise interest rates, and then inflation goes down. But is this actually real? No, because inflation exploded without even the Federal Reserve seeing it coming, and then they had to start raising rates. And then they had to add even more, like to raise rates by 50, 75 basis points, and then they had to stop. Now we have to see what's going to happen next. So not all the theories are that you read in the books is basically like, you know, the 1 + 1 = 2, especially in the market. But the best thing I would say, make sure that you concentrate on two things: practicing the market, and number two, which is even more important than the first one, is basically risk management. That is one of the things that I believe that a lot of people, traders, students, even, like, they kind of devalue the value of risk management. While I believe in trading, 80% or trading is 80% about 80% about risk management more than anything else. So I hope that we answered your question, Hannah. We have also.
Before we jump to another question, actually, I wanted to discuss something related to, or I wanted to ask you something related to the market when we were saying that what's going to happen for the Magnificent Seven, and if it's going to persist and stay and at the same levels, and how basically I'm going to extend the question, like how would that affect the indices, the US indices, or even the European, or even the Chinese indices. So I think that is related as well with whatever is going to happen on the bond market and the interest rates eventually. Definitely related to the Fed, but I mean that is directly related to that as well. So what do you think about that? What do you think the scenarios are going to be related to the bond market?
I mean, the bond market already told us a zillion times over the past year that there is a recession coming, but usually when the bond market gives you that what is it called? That signal, it takes between sometimes 14 to 16 to 18 months. So we got the sign, I think, if I'm not mistaken, back in June last year. So we're in the middle of that, and we're already trying to see at least some sort of signs of a slowing down. But will it be fast? Maybe will it be a soft landing? Everybody hopes that it will be a soft landing, but so far, kind of, it looks like it might be able to do like a soft landing. For the other stocks, don't forget something very important. The whole market recovery was built on the Magnificent Seven more than anything else. I mean, if you look at other
Rally.
Yeah, other sectors, or there's some sectors that they're in. You know, you consider them in la la land, that it's not even working, or there's no not a huge move. But I think the fact that the entire market is basically built on a Magnificent Seven, this is where the risk is. Because what happens if, let's say, when you say there's one or two companies that showed some sort of like a less than expected earnings, that's 33% of the market. That's 33% of the earnings. So what's going to happen there? So I think this is where the risk assessment comes in, that we have to understand basically for how long these Magnificent Seven will actually control the market. That's from one side. The bond market, again, I'm still waiting, because again, so far, I mean, today, if you look at 10-year yields, is still at 4.3. The 2 years, the 2 10s, also the difference between the 2 and the 10s, all of them still showing that signals for a recession coming. But the big question remains.
Almost the same.
It depends.
5, 7.
It's only the question if it's going to be like a hard landing or a soft landing. So far, it looks like it's a soft landing if things continues as is. But today, let's see, in about like 2 hours from now, we have also some US data. But yeah, I mean, whatever is gonna. At the same time.
What about the real field? Like, you know, like it's like the weather, right? Like sometimes you look at the weather and you see that, okay, it's like 25 degrees, but the real field is different. So now, if you look at the recession, okay, where we still not officially, or on it's not written that we're not in recession yet, but the real field is we're there. We can feel it.
I mean, here's the thing.
Inflation is literally destroying people, right?
Here's the thing.
You can see when you go to the supermarket, when you fill your car with gas, despite that the price of oil went down, and that's something that we need to discuss as well. But what about that real feel? How does that?
Okay, here's the real feel. I'll tell you about the real feel. Yeah. There's one thing that also people is still not getting the idea of. Guys, by the way, we're going to answer all the questions one by one, and then we're just going to go across from different topics to other, but I'm going to answer all your questions. When you hear in the news today, like, oh, inflation tumbled to 2 point whatever, inflation is still going up, but the acceleration of inflation has slowed down. So inflation never went down yet, but the acceleration rate of the prices going up has slowed down. So the prices are still going up. Speaking of the real feel, yes, I mean, until today, if you go to the supermarket, did anything basically, did any of the prices went down? No, but the percentage of the increase in the price has slowed down. If you go at the beginning of last year, let's say something with, $1, the month after it was like $1.07, and then now it's still going up, but in a less, instead of 1.07%, it's now going up by 1 point whatever. So that is a real feel. When this is going to change, I think there might be like a tipping point at some point where
compared to the wage, right? Compared to the income that you're having, isn't it like, I mean, is your income increasing at the same time? Like on whatever is happening
I mean, look at,
now,
let's say, no, it is not, but it's increasing in less. Yeah, I mean, it will never happen. It will never happen where wages will be above inflation. Even if it happens, this is when even if it's happened, this is when the government will intervene, kind of. Like it needs to be either a little bit less, a little bit above, but to be stable at some point. But the thing that we have to be worried about, what is happening in China to spill over somewhere else. So yeah, we're having like a slowing down in China. Yes, they are. The other day, they just cut their the 5-year prime rate for 5 years prime rate by 25 basis points, which they've never done this before. Usually it's like 10, 15, 17 basis points, but this time they did a record of 25 basis points, which gives you some sort of maybe an idea that a stronger measures will be needed going forward. But we have to keep an eye definitely on China, because I mean, when they say if the U.S. sneezes, like everybody else gets, I'm not sure what's it, but
everyone
get
else
sick or something. I think this time it might be China. But
well,
that's another thing.
China
I mean, if you look at
Corona,
investment advice or something.
China proved that in Corona time. Like we've seen the whole world is linked together in a way where we've never seen before. I think that's why now the diversification and portfolios is totally different than how it was before Corona. I think Corona changed. It created that new chapter in every investor life. So the way that we're looking at things is totally different. The way we're looking at cryptocurrency, the way we're looking at stocks, at indices is totally different than before. And the way that we're looking at the real estate, because I believe that a big part of the world, they were, I don't know why, just expecting that this this crisis is going to be exactly or typically the same as the previous crisis, and they were just waiting for the real estate to blow up from somewhere and start the whole domino effect. But that is not exactly what's going to happen, or what it happens until this part. We've seen in China the Evergrande, I think, issue, and then how big it is, and how they tried to stop it and to contaminate it, and then stop it from spreading, and that would have created a big drop or a panic in the market, because the same code that you just said on the US, if the US needs now, I think it's the same for China. So it's applied for China as well. So these are the biggest two whales at the ocean, and if someone flips or flops, and then you're going to see a tsunami happening on the rest of the world. So that's something that we always need to take into consideration. Now we have some questions between the chat and the questions, actually, asking if this is going to be a one-time thing or we'll be doing that more often. So I think
it's just a one-time thing.
I think it's up to them.
No, we will. No, we will have it like regular, at least. I would say, for now, it's going to be at least once a month, and then I think at some point we'll have to do it. Depends on how we develop, but I think at the beginning it's going to be this time, and then we'll do at least once a month. And then probably I would say we have to go for like maybe once a week or maybe twice a week. But I think like once a week is a good one, or once every 2 weeks is a good one, depending on how the market would go. Yes,
depending on
that's
the
for
market
sure.
data, same as the Fed.
Yeah, whatever the Fed will give us, we'll take it.
Yeah, exactly.
Yeah. What else we have? So live we did. Imad. I'd say, Imad, what are the odds NASDAQ makes new all-time high after Nvidia? I mean, today. Oh, okay. Well, take that question just for a second.
You want to hold the question?
Yeah, no, but can you answer this question for a second?
Yeah, okay. So basically, Ahmad, to answer you, just take a look at whatever is happening at the market at the moment, right? So Nvidia is a part of NASDAQ, and if you just take a look at the index and how it's moving at the moment, and the new highs that we're seeing, even on the S&P at the same time, that's something that you cannot take it out of the consideration. And as we discussed, and as we said at the beginning, when we started the discussion with Nour, we can see that every time.
Sorry, I had to take this call.
Same as Goldman Sachs, let's say, they increased their expectation of the high of the US 500 or the S&P. They said we're going to see it at 5,200. And with the rally that we're seeing, and with whatever positivity that we're seeing in the market and opportunities that we can see in the market, it's not that far. It's just 150 pips away. So it's almost nothing. You know what I mean? So that is always a possibility, but always consider, as we were discussing before, the risk compared to the reward that you want to take. So if you're taking that as at a certain breakout for a hit and run, trying kind of to scalp the trade, yeah, that would be nice. It's not bad, because usually breakouts would give you a nice return or a quick return on a very short period compared to the risk. But if you're trying to keep that and you do not properly, let's say, control your risk, that would hurt a lot, and that would cause huge losses on your portfolio. So at the current prices at 17,856 on the NASDAQ, it's not that far than hitting the highs, or hitting the 18,000, breaking the psychological level of 18K, and then moving a little bit higher. But keep in mind, this is kind of like already priced in, and the market.
That's a great thing. So priced in, yes. Was it priced in like maybe a little bit better than expected? Yes, for Nvidia, kind of. We're at the high, but something that I don't like is this chart, which is basically
we can't see
the
it.
time.
Which chart is this? No, because it's a bit blurry.
This one. This is NASDAQ. This is NASDAQ daily.
Okay.
In the next podcast, we'll be able to show it on the screen. But
that's the daily chart.
Yeah, but yeah, that's the daily chart with a scale of 50. And time and prices is not actually on our side when it comes to the upside, for one reason. From the low that we saw back in, like that recent low, all the way up, we went up by about 3,605 points within 77 days. And that kind of relationship is now negative, meaning the average daily move to the upside in NASDAQ is now below the recent average for the past 77 days. Usually that's not a good sign. Usually that is not a good sign. But I'm not saying that the market is going to crash. I hate to see, the market keeps going up like this without any kind of like healthy, orderly retracement. Because this is when you start seeing, some stuff that doesn't make sense. When stocks start like, double multiple in one session, and then, before you have people like trying like, oh, let me buy here, let me buy there. But again,
What
as
about,
I'm the most,
like,
what?
if you're looking at the chart, like, what about the channel up that we're like, if we want to take into consideration that those pullbacks are basically a correction for the NASDAQ on the daily chart, and since it went near the moving average or the SMA 50, it was able to pull back from that. So like let's say when we hit the 17,300, it was a nice pullback from there all the way to the current level. So we jumped another 500 pips,
And
or
even
500
and even if you
something.
look at it, even if you look at it on the daily, and even just without a scale, it did break some sort of like the what is it called? It did break at least the daily trend line. Would I be risking buying? I am the most reluctant trader ever. Anyway, I don't just take a trade because I want to take a trade, unless if I find it like, you know, attractive with risk. Yeah. But to chase the market, that is not me. Even if Nvidia or even if NASDAQ is going to go up from here by about, I don't know, to take the risk on going up even further, I would not be in that situation. What are the odds? I mean, NASDAQ is not only about, NASDAQ is not only about Nvidia, or the market is not only about Nvidia, it's not only about also the Magnificent Seven. But the good thing is here that you have to understand is risk again. But at the same time, even if you're going to take the risk, even if you want to take the risk after the market went up this far, you have to ask yourself, where do I stop my risk? Because if you're going to buy here, at some point, market's going to go back down, go back up. How much longer can you hold on your downside risk? So what I do is basically, when it comes like, to risk management, let's say if I want to risk 1% of the portfolio on one single stock, that 1%, I have to make it in also tranches. So I would buy, 0.1% at this price, and then we'll add even more. So even the 1%, even how small that 1% is, or how big that 1% is, I have to do it in tranches. I never take a decision, or I never take a trade where I put, okay, I bought it at one price and that's it. I'm just going to keep on watching it. I always keep the door open to average my trade, because usually it's always like any trade is always divided by 10 to me. I always divide all my risk for, let's say, that 1% I divided by 10. So I need 10 times to average my stocks, currencies, gold, silver, whatever. So you have to do the same thing. If you're going to take Nvidia here, make sure that you whatever the risk you want to take out of portfolio, let's say 10%, that 10% divided by 10. So you'll have another 10%. Each time you want to like enter, you have to do 1%, wait for a little bit. If it goes against you, you'll have to add a little bit more, but you add 1% by 1%. This is how you do it. What if it flies after your first? Well, if it flies after your first, it flies. But what if it goes down after you take it? So here's the thing. That's a good question, but
Don't be greedy.
yeah, it's arguably yes, but it's a good question. But here's what happens always: you enter, and then it goes up with you, like whatever, how much? But what are the odds that most of the time when you buy, it's going to go against you? Let's see. Can we do a quick poll? What are the odds? Let's see this one. What are the odds that if you take a trade today, okay, it's going to go like, I don't know, 100% up from where you took it? Can we actually add a poll? I think we can.
Can we add what?
I'm trying to add a poll. Let's see. I think we can.
Okay, while you're adding that, let me just throw something out there. We mentioned that, I don't know if we discussed it properly, but the layoffs that we've been having, or that we're having at the moment, or the companies started since mid last year preparing themselves to let's say the recession or whatever is going to happen on the market. that's something that is affecting as well the decisions or the size of the exposure that we're going to enter in the market. So that's why you need to take into consideration while doing your risk management. And if I'm going to enter by 1/10 or maybe 5 or one, like half or maybe 1/3 or whatever percentage you want to split
That's
your
going to take a
trades.
long time.
That's one. Second, keep in mind as well, whatever the big shots are selling at the moment. So we've seen Jeff selling a part
Yeah,
of
Jeff
his shares,
Bezos.
right?
Yeah.
So exactly. So those shares that they are selling, they don't usually sell them just for that. So it's either they have a good nice opportunity that they would like to enter just after, which is a very low percentage, or you just want to take more liquidity because cash is the king at the moment, and you're seeing blood on the street, and you want to just take advantage of any opportunity on the next movement or whatever happens next. But they do it partially in a very discreet way, and whatever goes online, then they will try to justify it and very like profit taking or whatever it is. But the reality is, if you've been in this market for long enough or for a few years, you're going to start understanding that, okay, the move that happened 2-3 years ago, it was because of that. So that's what happened just after it. And I want to come back to what I think Mary was saying regarding the whatever she want to study, right? So if she want to have an idea about what we do, or she would like to have more intense discussion regarding that, we're doing workshops as well in the office here in Dubai. So if you guys would like to attend, we'd be more than happy to support you. Just discuss it with your RM and book an appointment. We're doing workshops here. It's more not one-to-one, but let's say it would be a smaller group and more dedicated to whatever subject we need to discuss. Plus, it's not going to be the theory itself that Nour was explaining. It's not just this reading something. It's applying and seeing the mistakes and going back, doing back testing, understanding the reason why
100%.
work.
One of the most important things that actually helped me in being able to at least just make at least something, or not to do the same mistakes twice, is I do log my losses more than I log my profits. Because I need to go back and just see, like, what did I do? So here, back to Ahmad's question. So basically, how many tranches you apportion the 1% risk depends on your. I just told you, like, literally, I was not kidding when I was saying divided by 10. Divided by 10. So divided by 10, and then let's say as an example. So for the past 3 weeks, as an example, live example, for the past 3 weeks, I've been buying the euro. I bought it at 109.25. I bought it and then 108.60, 108.65. Oh wait, hold on. I'll give you exactly the all of them. We bought the euro here.
That's you personally, right?
Yeah, I got 109.25, and then I got it at 108.66, and then the last one I bought it at 108.27. All right. Today we're back up to 108.52, and we went all the way to 108.90.
Yeah.
And this is not the full risk. I'm not taking the full risk. This is just only 75% of the risk that I wanted to take on the euro. So I didn't take the full risk. It went down all the way to 107, but I didn't take the full risk. I would always keep some, because I don't know when the market is going to go back up. I mean, it went up today, but that's how I always do. I would not corner myself in, I just basically, spend all my risk on one currency. That's too much. I don't think
exactly. That was my question, actually.
Even with day trading.
The 110, do you take it usually on each trade, or do you want to take it on all your account and your risk management and your strategy? Basically, do you take it on each trade? That's your exposure on each trade, so you can be able to re-enter, or that's something that you take on the whole portfolio?
No, not on the whole
It's
portfolio.
a total exposure.
No, the total portfolio. If I wanted to tell you how many do I have now, I have Aussie, and Euro, and Kiwi, and oil, and dollar yen. All of them. I have like five trades at the same time. But now all of them are actually in profit. So, for example, I bought oil at 79.29. I bought dollar yen at 148.74. That's the only one that is lower because now it's 150. But I don't care. You know why? First, it's covered by oil. It's covered by the Aussie. It was covered by the Kiwi. It's covered by the euro. And add to that, I still only use 25% of the risk that I want to take on dollar yen. Only 25%. So I still have 75% to add to that trade. And one of the examples that was back in September, and I also went short on dollar yen 146, 148, 150, and it kept going up until 152. But in one day, it took us like 1 or 2 days, it went down 8%.
Well,
but
those are the different
that's why I'm telling you why I do it in tranches.
Yeah, but this is kind of like a different strategy as well. Like you can.
Oh no! I mean, even the buy and hold.
And re-enter and re-average your position, or you can be a different type of trader where I would like to hit and run and that's it, and stop my trade and move forward because maybe I don't have the time, maybe I'm not that sophisticated, or I don't want to be stubborn with the market because I didn't study it fully, or I don't have the time to finalize the full thing. So like the dollar yen position that you took a few months back, and you were averaging on the way up.
Yes.
From my side, I was doing hit and run on the way up. On the way up, and we discussed it before. So those are the kind of things. This is the beauty of trading. So it's like when you take an option and you trade against your option with much less risk, and you already covered your premium, and then you move forward. There are a lot of ways to make money in the market. You just need to have the proper tools in your hand.
You have to come up. You have to come back at the end to what works for you. Here's the thing: some stuff, or not everything, works for everybody. Never.
Yeah.
Whatever you think about, not every. So even if I have a strategy, or even if your strategy is 100% working, or my strategy is 100% working, it might not work for you. It all comes down to what you think is right and what actually works for you. Practicing it in the market. For me, that's what worked for me. Some people would be like, so for you saying like, how would you tailor this to day trading? You might be doing the same thing, but it doesn't need, when I say like you tranche it, you take the tranches in like 10, it doesn't mean that you have to reach the 10 anyway. But this is what you lower your risk. And at the same time, one of the most important things that I saw with clients for a long time. If you take the trade today at whatever, 110 for the euro, let's say, okay? And it goes down to 109, 107, 106, and they would not add anything because they only have 50,000, let's say. Okay, and they take one lot. So he needs like about, it keeps going down and he doesn't do anything because he's afraid to lose more. And then it goes back up, he breaks even. It gives him like a little bit, maybe $300, $400, and he would close it. All right, but you waited about maybe like 4 months to go back up, and you were down almost like 10,000, if not more. And you waited all this long to take about $400 while you were in loss for about like 10,000 bucks. To me, what I wanted to do, why do I not wait on my profit as much as I wait on my losses? So I used to wait for months for the loss. Once it gets back to break even, get rid of it. Okay, fine. I mean, it went back there, but the fact that it went back all the way back up, it means also something, that they still have the strength to even maybe to go a little bit further. So in my head, I was like, all right, well, since I was able to hold this much on my loss, maybe I should hold a little bit on my profits and wait, which is the strategy of buy and hold. It's not something new, like out of nowhere. But risk 10,000 for 400. I'm just giving you an example. It's not exactly, but there's a lot. I saw a lot of people would lose, and they would wait without doing anything else. It's just one thing, and that's another thing when they tell you concentrate on one asset. When they tell you concentrate on one asset. Concentrate on one thing. You should not confuse yourself. No, I mean, this is what diversification is all about.
Exactly. And speaking of
You lose
diversification,
you lose in FX, you make money with stocks. You lose in currencies, you might be making money with gold or oil or.
speaking
But
of that,
how to diversify, that is the thing.
exactly. That's something that actually you need to diversify no matter what. But speaking of the diversification and kind of like having a percentage of safe haven in your portfolio, right? What's the
Oh,
percentage
yeah.
that you take in your portfolio, despite the fact that we've seen the movement on gold and we've seen the movement on silver, which silver is a little bit more behind, and usually it's a bit faster, but it's a little bit more behind. But despite all that and the price of gold at the moment, we were able to bounce back from the levels of the 1985.
Yeah.
And we're trading now around 2030. So
Yeah.
it still made a nice bounce back from those levels. What's the percentage that you usually take in as a safe haven on your portfolio?
My safe
From the
haven?
metals, it's exactly from the metals.
Oh, I mean,
Or do you
metals, I
think
do
about
not.
it from a different way? Or do you think
Yeah.
about it like as if, like for me, the way I think about it, it's not just safe haven, a part of my portfolio. It's
Yeah.
as well opportunity where I just wait for the right opportunity and then take a grab few dollars from the market. Thank you very much. Bye-bye. And I've done my part.
Yeah.
I don't keep
Metals,
a big percentage of that. So what about you? What do you do from your side?
metals, what I do is basically I do buy coins to this day. I still buy coins, which is the King George
physical.
V. Yeah, physical. That's one. But on the other side, I have to do some hedging on the screen. I
Exactly.
still have to. So I do buy, but I buy the coins. I don't buy the gold bars. I buy the coins. First, you don't pay much taxes on them. That's number one. Number two, it is easier to get rid of when it comes if you need cash. Like if you have gold coin, you can go anywhere in the world and you can just basically fill up your gas tank and you can give them the gold coin and they'll give you money back. But if you give them a gold bar, they'll tell you, I mean, I don't have 50,000 bucks now to give you because it's just only 8 grams. But on the other side, I have to do some hedging on the screen. But the percentage, I at least have, I would say, between 25 to 30% in bulk gold, and out of that 30%, there's 15% that is already hedged.
Okay. So
Just in case,
basically,
because
it's like
don't forget, I'm buying gold. I bought gold since we were in back in the days in Abu Dhabi here, when it was 1,040. This is when the first bulk was actually
the whole
bought.
thing
So
started. Yeah.
yeah, so and on the screen it's 15% of whatever the bulk that I have, because again you need to kind of balance it.
Well,
Diversification based.
for me, I like what you're saying of like the gold coins, but I prefer, I don't know why, but I prefer the silver coins. I
I do
like the
have
gold
silver,
coins.
yes.
I have a couple. I do that at the same time, but I do silver a little bit more because I am more, I have a better belief that the silver would do a better move in the next few
This year,
years.
yes.
And it
Yeah,
should basically, it should do a
this year,
better move
yes,
in the next few years. Yeah.
it is possible.
Yeah, so between 2024 and 2025, at least.
Yeah.
This is
I mean,
where we should see.
I would say with silver, it might be still undervalued for a long time.
Exactly.
But I think also recently, because also banks started to play a huge role, and this is one of the reasons why gold is still up here, because again, people are saying, okay, well, gold went up because inflation went up. Now inflation is slowing down. Why the dollar is back up? Because most of the banks now they're like clearly saying to people, hey, we are buying gold, we're buying silver, we're buying metals because of inflation and other stuff. But
Hedging, and they're gaining credibility as well, because now
oh yeah,
people, they started to understand that there's no proper credibility for any paper unless you're
yeah,
hedging it with something. And
yeah,
since Corona time, we started to feel like with all the bankruptcies of the banks and what we've seen, what happens in the US and even in our region here, like, okay, your Jordanian and Lebanese, and we've seen what happened in
Yeah.
Syria and Iraq and Lebanon and the whole
Yeah.
region here. The whole banking system it collapsed between like within few months, where a lot of people's money they got lost. So
Yeah.
eventually,
Sure.
whoever had the big chunk of metals backed up by their government are the ones that are still standing now, and they are the ones that
Yeah.
they have they are legit for us, or they have the credibility for us. And we've
Yeah.
lost that in most other banks, and that's why we're saying that cash is the king at the moment. And the
Yeah.
cash, by cash we mean the dollar is the king at this
Yeah. The
stage.
dollar is the king. Although it's going
Exactly,
down
the
today.
dollar is the king, despite whatever the price on the chart that we've reached on the dollar. And if we want to talk a little bit about the dollar index price, you've seen that we were still able to like, we didn't break the 1029, we didn't break the 1039. We're still above these levels, and this is these are levels, like, for me, that are very important. And since the trial to break the 100 few months back, we discussed that a lot of times before. Now, would dollar stay and persist in the position where we at the moment? Like, are we gonna still see the dollar getting stronger and stronger for the next at least, let's keep on saying, till the Fed will start decreasing the rate, or maybe a month before, because eventually it's gonna start getting pre-priced in the market, and the market will start feeling it a bit more, and then we see the decrease in that. So when the Fed will take that decision, we're going to see not a collapse, but let's say a proper correction. And
it's already priced in now. Yeah.
In the stock market, we're going to see a proper correction in on the dollar index, and at the same time, we're going to see everything against the dollar moving the other way around. Now, what are the products that will not get affected at the same pace? That's one. Second, so let's say oil, would it get affected the same way? Because we do know petrodollar, it's linked to the dollar. So would it be affected the same way? Yes or no? The gold, would it be affected the same way? Is it related to inflation, or is it related to the gold? To the dollar strength itself? Because if we did have a slowdown in the inflation and the decrease, now it's a slowdown. If we have a decrease in the inflation,
decrease is different.
Exactly.
That's going to be different
scenarios here, right?
Yeah.
So
here's
what do you think?
I think the dollar is still going to go down up until they start actually cutting rates, because if you go back, look at the chart of what happened to the dollar while the Federal Reserve was actually raising rates. The dollar was going down, not the other way around. While the dollar, a year from the beginning of raising rates last year, the dollar was going up. So it is always, if you go back to, if you want to understand how currencies works, like specifically, you would not be confused about it if you understand what it means. What this word means is basically policy divergence. The difference between policies between different central banks. So when you talk about, the dollar, when you talk about the euro, you have to look into what's the differential for interest rates between the ECB and the ECB and the Fed. If it's dollar CAD, you need to look at.
So for you, they're not correlated.
The difference between what?
They're not correlated. Like for you, they're not correlated. The decisions between the central banks,
they're not correlated, but what moves the currency market is the difference between both policies. Which one would weigh more on the other? And this is how you get. So recently, again, like from the beginning of the year, the dollar was going down from the end of last year. Sorry, the dollar was going down based on what? Based on the expectations that the first rate cut will be in March. The markets needs to basically to price in this in advance. So we did that all the way up until January, and then inflation data came in, and then they changed. Now it's like until April. But yesterday's FOMC meeting minutes, they're talking about trimming the unwinding of the balance sheet. This is why one of the reasons. But I think the dollar is going to keep on going down up until they actually start cutting rates. But even if it's going to go back up, because we don't know if they're going to be cutting rates by, so far the market is basically just pricing in cutting rates by 25 basis points. But are they actually going to stop at 25 basis point each time? Or they might have to do 50. Now, the market is not priced in for anything when it comes to 50 basis points. It is just the 25 so far. This is what might be or might be.
If it's a one hit.
But this is what would change the move from being priced in, or we have to price in more when they take the decision.
Yeah, but the total expectations now in the market is simply around 0.75 maximum, right? For this year.
But that's for now.
It's a little bit less, basically.
Yeah,
but let's say
that's for now.
That's the maximum for now. If we, for my perspective, or for the way I think about it, if we do the cut and we do the shock for the market, or the Fed might use that, by the way, which is a very clever move, and that is something that should make a sound, and then it will keep the movement and the vibes in the market keep some tangled. But I mean, if they do that, they would be obliged at the same time for the next move to or maybe not the next one, the one after it, to retest that strategy, the same way that as we've seen a few years back. They were increasing or even decreasing in the previous years. So from the mentality of the group that is now taking the decisions, it feels different. Like if you go back in time where Bernanke was there.
Bernanke was something different.
Exactly. So now it feels different. It's a different story now. They are very cautious. They are not doing any crazy move. They don't want to hit hard in the market. They are they're kind of like they're afraid from any craziness that might happen in the market.
They have the right to be afraid. I mean, they have the right to be afraid. Don't forget, I mean, inflation exploded after 10 years. They've been saying inflation is too low. Inflation is too low. While inflation was at 2%, and it exploded in a way that, you know, it hurts everybody. And then they came back and say like, all right, well, we were wrong. Sorry. But they've never been right anyway.
Yeah.
But I mean, you'll have to go with the flow. Let's do you want to, okay, let's take, do you want to take more questions?
Yes.
Hannah, let's just go back to Hannah. I believe in order to practice the market or learning risk management, one needs to step into the labor market and increase their income one way or another. Okay. Wouldn't that affect my GPA and or academic performance? Honestly, I have been into no, I'll tell you something. I am one person that I used to do both. I used to, you know, study and work at the same time. And I was actually in the market when I was studying too. Even, I'm telling you again, people sometimes like make fun of me how much is like my risk management is ridiculous, or the you know, the amount of trades that I do is very small. But at the same time, there is a saying, let it drop instead of, you know, to be a flow and it would cut off in one time. That's a saying in Arabic. But anyway, I try to translate it as much as I can. but you'll have to, I mean, in this day and age, you'll have to do both. But here's the thing, you don't need to practice the market first in real money. But at the same time, it is definitely a different, what is it called? It's definitely a different feeling when you trade with demo and when you trade with real money. Because a lot of people would come to us and say, hey, I have a huge, great strategy. I'm making a lot of money on demo account. But the moment he enters the real account, that strategy stops working out of nowhere, like out of the blue. It used to work on demo account and then it stops working full. So you have to do that. But I think, I mean, if it's going to affect your GPA or not, that's on you. that I can't help you with. But you'll have to find a way to do it.
Well,
if you want to like understand it correctly.
There's two things related to that, Nour, as well. Just to answer Hannah on something that I experienced in like in the business universities and schools, that the system that we've had. Okay, so I've tested the American and the French system, both of them, and that's something that we have basically in Lebanon. The French system, or the not the American one, is all based on theory. and you study a lot and you do not practice most of the things. But they do oblige you, before you apply for your MBA, they oblige you basically to do a minimum of 2 years in practice, because they believe that if you do not practice, you won't be able to define what you want eventually. Despite if you're the number one and your GPA is the highest between all your colleagues, that would affect the choices that you have personally in life, or what you're good at, and the things that doesn't maybe break you, or the things that you're gonna shine in. But the American system is totally different. The American system is a bit more into practice than the theory. So you gain your experience from the practice, and which is something, to be honest, in my opinion, I've done this and that. Like, I've studied the French system, and then I've been practicing this job for the past, I don't know, maybe 15 years. But I mean, the experience that I've had by working is 1,000 times better and more than whatever I've studied before. Okay, the study was essential, but I mean, it's not the thing that I really can say that this is what brought me here, or this is what got me to where I am at the moment. So it's very important to practice things and have the real feel. That's the real feel that we were talking about, and despite if it's on recession or it's in the studies and all these parts. And additional to whatever Nour was saying regarding the mistakes, like as if you're doing a demo account or a real account, keep in mind, if you have a proper strategy that you're applying without any risks, without any fear, without being under pressure, this is not being successful.
And this only happens when your risk is low. Because looking at the numbers, large losses affect all your decisions. That's another thing. And like when you look at the
accounts, there's no fear. There's zero fear. You just don't care. Keep the trade open, go to sleep. It doesn't matter.
As long as you know your risk or how much you're going to pay for.
You wouldn't keep it open and just never look at it for the next 24 hours unless you're like if you're on a live account, right? And unless you're trading with the same number and the proper exact fund that you're discussing. So it's all about the practice and how emotionally and mentally you're attached and you're accepting your well-being and how you move forward and that.
Alrighty. FOMC, we already talked about that.
What's new? We've done that.
We have also Magda. What about if the interest rates will drop, but the economy will not hold? I mean, they'll have to cut even more eventually. I would say so. What about if interest rates will drop, but the economy will not hold? Yeah, I mean, they'll have, if it goes south, they'll have to cut even more, I think. It's not about just cutting and staying. I think they'll have to go back like with interest rates way lower than in the next recession if it happens, or whenever it happens.
If the economy doesn't hold, you mean?
Yeah, I mean, they'll have to go even further, or they have to go deeper, just like they've done before. I mean, it's not something new. I mean, cutting rates or raising rates, it's something like very normal to be done. But it stopped being normal after the financial crisis, because this is when, you know, interest rates hit zero and they stayed at zero for a long, long time. But if it didn't hold, they'll have to go back down. Mary and Salai, let's see. What good app would you suggest someone looking to start investing in stocks? I'll give that question to you.
What good app would you suggest to someone looking to start investing in stocks? Well, based on whatever we're discussing related to investment itself and the tools that you need to be able to invest, one of the main things that anyone would look for are or is basically the broker itself, because that door or that broker would give you all the tools that you're looking for to be able to invest in diversified portfolios or in diversified products, with all the tools that you need to be able to have the proper risk management, proper service at the same time, the proper let's say, fund and withdrawals, how fast it is, the spreads. All of these are something that is that should be taken into consideration. So let's say for us in Square, the way that we do that, we have more than 10,000 products all in one platform, 3 platforms that you can use, which gives you more options. So as long as you have all those options, it's up to you. Then you see what you're comfortable with. Okay, I would like to trade single stocks, you have them. If you want to trade ETFs, you have them. You want to trade bonds, you have them. You want to trade US, EU, UK, Chinese, whatever type of stocks, you have them all. If you want to trade on FX, you have them as well. A bit of crypto, depending on your location around the world, then you would be able to, based on the jurisdiction of the regulator where you are, you will be able to trade them or not. So as long as you have all those options, this is where you can take a better decision. So the best platform is not related to the platform itself. It's about the whole package, all of it together, the cost and the services that you're going to get. Because are you going to just buy and hold? That's something. And are you going to trade? That's something else. Because if you're going to buy and hold, you can do it literally everywhere. It doesn't matter. Then even the cost of buying, it doesn't make any sense for you. Like you won't even care about that.
Yeah, if you're holding,
start thinking about how much it will cost you to hold it in a certain broker or to hold
and
it.
if you want to buy and hold, you won't use it as CFDs.
Exactly.
You would go for the actual stock, so it's different.
Would be crazy. Yeah, it would.
But Mary, before you start doing that, it's not about like the app as much as about like it, understanding what you're doing before even finding the app. That is one thing that you have to also think about. Sorry, I don't keep going.
Yeah. So I just want to add, so Mary, if you want to have more info, we can have a side discussion regarding that to tell you how to build the whole thing and have the proper mentality before you start, because the app is just the tool and the interface. Whatever is happening in the back end is the thing that makes sense, because in the back end, the back office, how the liquidity is working properly, how the execution, how all of these based on the strategy that you want to apply, this is how you start making sense and the decision that you want to take. So we start by what's the trading plan that you want to apply? Is it a short term, medium term, or long term? Based on that, we start discussing whatever can happen after. So I think we can have a side discussion and give you more clarity regarding that if we didn't answer it fully. And we can be a bit more specified by person in this case.
All right, we have Ahmad again. A question that comes back every time is how long would someone need to be? Okay, yeah, that's a good question. But here's the thing. It might take you a week. It might take you 10 years. It also depends on you.
Which question? I didn't hear.
His question was a question that comes back every time is how long would someone need to become profitable? But the thing is, it's not about time as much as it's about like understanding what's going on, and it's not much about. Here's one good practice that you should do, or I think all traders should do. You should again log your losing trades more than your profit trades, and number two, you have to set up rules literally in front of your desk whenever you're trading. I should not, let's say, chase the move. I should not risk this much. You have to set it. The only way that you can reach the point where you can be profitable is when people understand that it's not about time as much as it's about that I have to set rules. Rules for what? Rules for each trade. I should not be buying a stock unless this happens. I should not be buying unless the euro breaks this level. Why this level? Because it's been there for the whatever 6 months. It's a holding. It's X and Y and Z. When should I exit the trade? When should I stop loss the trade? Without these, forget. It's not about time. It's all about because I'll tell you something. There's a lot of people would trade for 10 years and they keep losing, and then they come to the realization after that, thinking, okay, well, I'm not going to be doing the same mistakes again. I have to go like overhaul everything I know about the markets, and they have to go start from scratch. So I'm telling people, start from scratch now before you spend that much amount of time losing in the market or trying to make a quick buck or a quick money. Because at the end of the day, you're going to reach the point where, okay, well, the market is basically, beats me every time. Why? Well, you have to go back to your statement and have a look at it. And I'm definitely sure each and every single time you look back at your old statements, you'll be like, why did I do that? I mean, why did I do that? Why did I take more size? Why did I take bigger size than I should have done it? So that's another thing. And understanding risk management, that's another thing. Because again, there's the 80% risk management, the 20% left is all about like, what is it called? Emotions. Because now open Nvidia, I mean, just the stock itself, anything, like any chart, whatever. I can guarantee you, like, let's say this one here, which is oil. It doesn't matter to me. I mean, it's down by what? Almost $1. I wouldn't blink. It's just $1 because I only have only one lot on oil, and it's still up by 400. But I wouldn't panic because I don't have that big size. Imagine if you have 1 million on oil, and it moves like $1 up and down every day. So it's not about time as much as about understanding that.
To liquidity as well.
Oh yeah, and it doesn't matter what the market, what you think about the market.
The demand, all these stuff. But
oh, sorry. It doesn't matter what the market thinks or what you believe. The market is always right. We're always wrong, no matter what you believe in. But that's the case. It doesn't take that. It's not about time as much as it will take for you to understand that I have to go back to the basics and I should not risk that much. And I should wait on my losses, wait on my profits too. That's what I think. That's what was the aha moment, let's say.
Let me add something to that. Well, actually, there are different ways to be able to get to that profitable trader or to be that profitable trader. First of all, Nour, I think we need to do the how to build your trading plan again, or how to build your trading strategy. Yeah. We need to do a session which is focused on that part, which is something that we're doing in our workshops that I already discussed earlier.
I mean, now so also we're having the new educational center
with certain individuals, but basically maybe we need to do something for everyone where we explain how
we're doing a new educational center, educational section on the website that's going to be from below scratch.
From scratch. That's beautiful.
No, below scratch.
Below scratch. Okay.
Below scratch, if there's any. Yeah, that's something that we're gonna look for.
And we'll be more than happy to
working on it.
To support from the beginning as well for the people that would like to understand a certain part that they didn't get it from the website as well. But to add to that, there's a saying or a quote as well in Arabic. It says, "أعطيه خبزك للخباز لو أكل نصه." So exactly. It means that at the same time, if I'm someone that do not know how to trade, there are already experts and people that they have all the expertise and they've been out there for quite some time, and they've reached that level where they are doing well at the moment. So I need to go and stick to those people, go and learn from those people. And this is why we have something called copy trading in Squared. So if you go to the website and you have an account with us, so what's going to happen is eventually you're going to, from the portal, you're going to have access to the copy trading. And from that copy trading system, you'd be able to track and see every profitable trader, what's their drawdown, what's their maximum profit, how long have they been trading, and you can even learn from them because eventually your account will be linked to them. So maybe by tracking those trades, you can learn as well from their strategy and try to develop yours. Third part, so the third thing as well, you need to always backtest. That's one of the most important part to become a profitable trader. So despite that you're doing trading on your live, go as well offline and do backtesting, and try to tweak every time your strategy. The whole thing starts by building your trading strategy. Once you have that trading strategy ready and in front of you, then you start tweaking it, and then you start fixing it and developing it step by step and going back in time and see, okay, based on that pattern, how would my strategy react and how would I fix that issue? How would I become a profitable trader in that position itself? This is how you start developing and becoming a profitable trader. making losses in your account is not mistakes. Be careful. Losses does not mean mistakes. At a certain point, you cannot be 1,000% or 100% a winning trader. You can never see a person that does 100 trades, 100 trades are winning. If you see someone like that, for me, it's a scam. It's something that doesn't make any sense, because simply, if you have a proper strategy, there are always tweaks in the market where it will bend your arm a little bit, or it will hurt you a little bit. The smart things about it, or the proper thing about that is your risk management, how to protect yourself to hold your gains and then keep them there and keep developing your portfolio and get to the end of the month with a decent percentage. You don't have to be on 10, 20, 30% per month. A very small percentage is something very, very good. Plus,
Yeah.
don't be greedy.
Whoever accept that percentage.
Exactly.
Yeah.
That's the problem as well. People are greedy and they don't look at the big picture. So sometimes, if you think about it, guys, if you get 1% per month, that's 12% per year. That's a huge percentage.
Better than a bank. Better than three banks.
Much better than the bank. But people do not think about it the same way. Imagine you're doing only 2 to 3% per month. That's a huge percentage. And especially when you're not doing a lot of effort and a lot of work in that. So with a proper risk management, with understanding the risk that you have in the market, understanding the fact that you might have some losing month and some winning, but your average monthly is at X percentage, this is where you become, this is where you have that proper mentality of the profitable trader. So you need to have the mentality of the profitable trader, and then you start becoming a profitable trader.
Even he's saying here, like, because most people don't have enough money to trade with. I mean, it's not about the capital first as much. That's why he's saying, like, about the back testing.
Yeah, exactly.
You'll have to go back into the basics, because you will not get the idea that the only way to make profits is by managing your risk more than managing your emotions, more than even if you don't know anything about what is it called? Even if you don't know anything about markets, okay? But I mean, since centuries, you know, the price of something goes down, people stop buying it. And then, because the anticipation that it's going to go back up. But these days, people are chasing the market, chasing the price. Come on, man, it's going up. I mean, look at it; it's going to go up more, and everybody buys the top, just like crypto at the beginning of it. And now crypto also, don't forget. I mean, the other day also the exchanges said that they are seeing more activities from retail traders too, that they're back to the market again. But after Bitcoin went up to 50,000, I mean, Bitcoin last year was how much? And it went down all the way back down to 20,000. Nobody thought about it.
17, 19. But
here he said
we've
just
crossed 1 trillion in volume. Like, we've crossed the 1 trillion in volume again.
The volume is still 20%, Dominique. The volume of crypto today is still less than 20% compared to the volume that happened in the peak. It's only 20%.
Yes. And the reason as well for that is, keep in mind, all the money that's been spent in Corona time and all that liquidity that is there, this is what is giving the market more liquidity to work with. And this is what's giving the market that push to push the indices, the crypto, or anything else, or even the metals. Like, despite if we have a lot of central banks that are still buying and they want to increase the confidence, despite that we have the geopolitical tension that is affecting definitely every week or every weekend as well, whatever is happening in the region that is affecting the gold and oil at the same time. But with all that, we can still see a lot of push and a lot of strength that the investors, they want to have more. They want to add some more, and they're just looking for the right opportunity. So the whole idea is just be out there. Once you're out there, it's much easy. So you were talking about, like, for example, you were talking about the euro dollar trade that you had, right? You have a couple of euro, yen, Aussie, and all these stuff. Now, some people applied your strategy and bought basically from the bottom of the channel and before the breakout, right? So you bought the bottom of the channel, the breakout, and now whatever is happening. Some people will
and I'm
be
going to add
a
to
little
this
bit more
too.
less risky. They want to take a little bit less risk, or maybe they want to hunt those trades a bit more. They would only just buy the breakout, and they would have made a 30 pip, a quick 30 pip.
Exactly.
So different strategies, but if you're not out there in the market, you won't be able to benefit from that. Plus, you need information. So let's discuss it, like, to be very honest. If we're not discussing those numbers now or those products now, maybe I wouldn't know that you had the euro dollar. I wouldn't know what are your thoughts on the dollar yen. So, and stuff like that. The same idea for NEO when we hit the low on the channel and it bottomed down with a new low.
Yeah, the 142.
Yeah, it was like I was jumping around saying like, wow, this is a beautiful opportunity. Go and grab it. Okay, among a lot of other stuff, but it was too obvious. Sometimes the market gives you something like, it's like, it's giving things away, right?
True. He's saying here because
to grab it.
He's saying here because, you know, I mean, most people don't accept 1% per month. It's because lots of people have small accounts. Here's the thing about small accounts. Even with your small accounts, you start with small accounts and then you have to add to the same small account, not just by trading, by adding an actual cash into it.
Yeah, the refunds.
You add into it too. But each month, every 2 weeks, I don't know. It depends on how you work. But the idea of how to create wealth is basically just to keep putting on the side. But instead of putting on the side, put it in a trading account and buy and hold something.
Yeah.
It doesn't need to be day trading all the time. It needs to be, and at the same time, you can do both. You can do something on the side that is, this is a long-term account, and this is a long-term account, and this is not a long-term account. This is just a short-term. This is just someone I know in London. He had an account. He calls it the account of luck, which basically he just waits if there's like any kind of, like, you know, people talk, chatter on Twitter or something, like, oh, he was like, all right, well, I'm gonna do this option, like, I'm gonna get lucky someday or not. And one day he did actually get lucky, and he got like a big bank out of it. But yeah, you can still do the daily trading that you want to do, but at the same time, what matters is, again, build wealth over time. That is the one thing. Not in a short period of time. It will never happen. I mean, the odds, again, maybe is 1 out of a million or whatever that is. But yeah, building the account, it doesn't need to be from the market as much as also you have to add into the account, as long as you're stable. Or your balance is stable, your equity is stable, and then the rest, I think, will come from the market as is. But basically, the people need to realize
your
this.
Account the way you like, because it can be as you said, it can be a short term, a long term, a medium term. You can even gamble with that account, which is, and call it the lucky account or whatever it is. Just there are a lot of people that go all in a certain trade and say like, okay, I just want to test. I want to see either I'm lucky and make a big winning, or I'm gonna lose that small amount. But from my experience in this market and what we've seen as statistics and the dealing desk from the years before, we've noticed that if a client really think and really does the study and planning before they start trading, this is where they will start becoming a profitable traders. So eventually, in a lifetime of a trader, they will fund at least 3 to 4 times, right? So if you think about it, if you start with your account, I'm talking, let's say, to Imad here, he's starting with a very small amount. Imagine you're gonna do that fund 3 or 4 times, right? So it's like 3 times or 4 times, whatever is the initial amount that you're gonna start with. Now, if you're gonna start with $1,000, 3 to 4 times, that means you're gonna end up to $5,000 or $4,000. So $4,000 or $5,000 account, you're going to treat it totally differently than an account where you start with $1,000. This is where basically you start fixing your trading strategy. It's based on the capital and the exposure and how much margin you're going to take, how much risk you're going to take in your account. If you start with a very tiny account, you're obliging yourself to take a much higher leverage, which is much higher risk. Because keep in mind, you can open an account with $50. You can open an account with $100. If you open an account with $100 and the minimum trade size is 0.01, which is 1,000, right? €1,000 or $1,000. It means already from the beginning, you're taking 10 times the account that you opened. So you are taking 10 times a leverage on your account without even starting. So each pip value or each movement in the market will affect your account with a big percentage, which is wrong, which is 100% wrong. I think you're on mute, Nour. So this is something to be taken into consideration.
Yeah, sorry.
So there is, for me, there's a minimum fund that should be there.
Yeah, 100%. There should be a minimum fund. Yeah.
Don't start because you're gonna waste your money.
Yeah.
Just go and spend them in a place where you'll benefit from them. It's much better.
Get
Go
a
and
coffee,
spend them on
something.
learn, test.
Oh, yeah. I mean, that's better.
Yeah,
I
exactly.
thought I was saying
That would
like
make
spending
more
on
sense.
coffee.
Or go
Yeah.
buy some coins, like some
Buy
physical
some
coins.
But yeah, I mean, again, the whole thing about the risk and small accounts, man, even the small accounts, you can still build them with stocks, or we can still build them with currencies, with proper risk management and with very tight risk management. You can still build that one. But again, I mean, people still would not accept, small percentages or small profits or whatever. But that's human nature too. I don't know what I can tell you. Let's answer some other questions.
Said something. I think we crossed it to the 1%. Shaza asked regarding the sessions that you're doing and
it's still not up yet. It's going to be, we're going to do videos. But yeah, we're going to have videos with animation. That's going to be on the website soon. But this is going to be from scratch, literally from scratch. When
do you expect it to be live, Nour?
I mean, we're already working on the first 10 videos already. That should be there, like, I think within maximum 2 weeks, I think. And then it's going to be like, it's going to expand by the the days. But yeah, I think within 2 weeks that you'll start finding them there. Did I miss one of the questions?
Meantime, as well, for the ones that are interested and they would like to learn, as I said, we are doing the workshops again in-house. So we have the laptops, we have all these stuff, and then we start from scratch and we explain these until we start having the material in parallel. So so far we can start doing the workshops, you learn from scratch and you learn all these stuff, and then later on we're going to have additional material that you can take home and study or revise or even do by yourself if you'd like. So anyone that is living here in UAE, they can pass by the office and we can discuss and have almost like a one-to-one session to be able to support you. But you need to book before. Just let us know.
Somebody also,
we'll sort it out.
Hannah also asking about self-improvement book recommendation. If we're talking about trading, I would say there's 2 books you have to read. One of them is Market Wizards by Jack something Schwager, I guess. And also read the book of Intra-Market Analysis for John Murphy or Ashraf Laibi. That is 2 of the books that I would say. Hisham also, is private equity a good suggest for investment in Egypt? I'm not getting your question. Can you ask it again?
I think what he means is investing in private equity in the local market in Egypt.
Oh, gotcha. I mean, I can't even I can't comment on Egypt or on
exactly. Let's talk about emerging market actually to be a bit more Yeah, that would make more sense, to be honest, because Egypt falls under a category of emerging market, and eventually I think that it's an investment is an investment, and most of the emerging markets are doing really well, and they're showing a lot of interest for the for basically the investors. But at the same time, it all depends on your capital and how much are you allocating to put in emerging market. Because keep in mind, if you're putting all your capital in emerging market, that's something. And if you're diversifying between international, local, hedging strategies, or a bit of safe haven, that's something else. You need to diversify because the private equity costs a lot. There's no proper margin that you can take on that. So the risk is like it depends on whatever is happening in that country, the geopolitical status, and whatever projection you have from that country itself for the whole region.
All righty.
You were reading Osama's question, right? From the
I think no, but there's also because we jumped on one of the questions. There's Hussein, thoughts on cryptocurrencies trading in the future. I mean, here's the thing that I'm worried about. The fact that retail investors are back to cryptocurrencies after the move that we saw last year and this year, kind of a little bit concerning. However, it doesn't mean anything. Doesn't mean anything how I feel about it. But I still think, I mean, again, the whole crypto idea it's something good, and it's being implemented slowly through the banks and all this kind of stuff. And we just had, you know, the ETF authorization from the US, and we had the ETFs, and the inflow was very strong, but that inflow is not from retail investors. It's from corporates, big companies, big investors, big whales. The future is cryptocurrencies. Yes, 100. I would. It's hard to argue not to say that it is actually the future of payments, because now, let's say here in the UAE, now they're using the crypto, the Ripple protocol for the transfer between banks. So it's already being implemented. The protocol is actually a good thing. But as you say, like if you want it as an investment, it's a risky investment because it is not stable. Does it hold value? Kind of, but on the long run, because again, Bitcoin was at 60,000, now it's at 50. It used to be also 20, and it started with 1 cent. So gold never went to 1 cent, but it kept holding its value over time. So until the markets start kind of behaving in a better way, I would say it's not an investment. It might be it's a type of payments, and it's a type of basically scalping that could be possible. But if you can buy some small amount or whatever and hold it for a while, that is also not a bad idea too. Now we go back to Osama.
Yeah.
Thank you so much.
I think Osama is saying that he didn't understand the forex properly, and he's done a lot of mistakes before, and it's like you started on the wrong foot eventually, which is kind of, in my opinion, maybe 70 to 80% of the traders they do that mistake. So but it doesn't
you're not
mean
alone.
that you're a bad trader. It means
you're not
that
alone.
you need to just adjust your trading strategy, get your things together, and start properly from the right from the right place with the right people at the same time, because it makes more sense to work with people with an expertise than working on your own. This is how you learn eventually. That's the learning process.
100%. All right. Do we have any other questions yet?
Investment in startup or invest in private company, not IPO. That's two different things basically, and two different style of investment.
Startup, invest in private company. I mean, it depends. Listen, it depends on each and every. And with startups, it's not a bad thing to invest in startups. especially if they have the actual product. That's definitely not a bad thing. Private company, same thing. What's the product? It's always about the product, not much more important than anything else. So yeah.
Well, I think there's two more questions, and we would answer, like we've already done all the rest of the questions. One is regarding SquaredFinancial. Why should we choose this company? It's very simple, because we're there. No, to be honest, listen, there is nothing in the world called perfection, but there is always something called the right tools and the right time and the right place. So in Squared, I believe the people that work in this company, they have a collective experience of, I don't know, more than 60, 70 years, which is amazing.
That's true.
And like it's like really you can find gurus of this industry, from Philippe to Mani to Nour to Ali to Thomas. Like most of the people and the group, they have a lot of experience that we all, I believe, until this second, we learn from each other and we develop our skills, and we keep on developing strategies where we'll be able to serve the clients in a better way, which is always the target. As long as you always put the client in front of you, and they are the ones that should benefit the most, this is how you get a successful company, and this is how you basically build on something solid. And you know that the client that's going to work with you, he's going to stick with you forever. And this is what we've been having for the past, I don't know, maybe 14, 15 years here in Dubai and in Abu Dhabi and UAE. The people that we've been working with, we're still together until the second. Why? Because of the quality that we give and the transparency. It's not just about the quality, it's the transparency as well. Everyone does mistakes, everyone has issues, everyone might face an issue if it's technical or from any type of issues. But the smart thing about it is how you solve it, how you learn from it, and would you be transparent enough to discuss it and fix it? These are the things. Plus, you have all the products in one platform, you have 3 platforms, and you have all the services that you can dream of, or you can even think of using. And we're not a broker that is trying to push the clients to lose so we can make money. No, we're here to develop your skills, or we wouldn't be doing such events or such things.
I hate it when people, sometimes they say
workshops or anything.
I hate it when sometimes
win.
People blame it on the brokers when they lose money, I think.
Yeah.
That's one thing that I don't like about this market. Or like the whole industry is, sometimes I think whenever I buy, the market goes down. It must be the broker. I mean, the broker has nothing to do with the price.
Yeah, exactly. It's
if you buy and it goes down, I mean, that's on you, not on the broker.
Yeah.
But yeah,
it's about what you do. Exactly. And it depends on the volume that you are trading with, depends on the amount that you're starting with. There are a lot of companies. I think that the next discussion, we need to emphasize a little bit or start discussing the part which is how to build your trading strategy. And because I feel that most of the attendees are interested in that part, and we should
all right, we can.
We should support
we
them.
now know what's the next podcast going to be then.
Yeah, exactly. So we're gonna do that again.
That's good. Yeah.
I think your beloved Japanese yen, you have a question from Raghid regarding that. When would the Bank of Japan intervene again? And do you think the Japanese yen will strengthen again?
I genuinely believe it's gonna strengthen again, but it's about time.
You're talking about the yen itself or the cross, the dollar yen?
No, the yen itself will strengthen. So the dollar yen should go down.
Okay.
Excuse me, but I think it's about time. But the question is how much longer you can hold. That is the one of the most important things, is how much longer, how much time can you hold on your trade? So for me, I can still hold up to 156. I wouldn't even give any, it wouldn't have like any problem with me. So I can keep going, shorting up to 155, 156 if it goes there, I'm saying, but I don't think so it would.
And
But
you
let's
won't
say
change the strategy up until that level.
no, I don't think so.
Interesting.
Because here's the thing, it's been doing this the same thing for over like maybe over 10 years now. Okay. Each time we get around the 150, 155, and then we get intervention. Recently, we're not getting an intervention, we're getting verbal interventions. Verbal interventions means that they will send out somebody from, the central bank and say, yeah, we're watching the FX moves. Yes, we might intervene. Yes, we're watching it in urgent matter. Or they might send somebody from the finance ministry. But at the end, saying that we might do, we have to, we think so. Yeah. So as long as the dollar yen trades below 156, I'm gonna just keep on taking my luck, let's say, on this one, because last time, I mean, it gave us 9% within 2 days. So, but this time my risk is less than my profit that I made on the same one. So if I made 9% on that one, my risk here is less than half of that to make something else. When I think it's just about time. I think it's like anything around 152 again, it will definitely bring, I wouldn't say definitely, but it would bring at least some verbal interventions. And I would, at some point, I think 155, 150 or 152 is at least going to bring, some shadows online. And at the same time, the other day, they kept on kind of changing the language of like, oh, we might have to do the exit soon. Inflation the other day was not as good. So it's going to take some time. But the question is, how long can you hold? I can hold as much as I can. I wouldn't even if it goes to 155, I'm fine. I can still hold. And up until like it gets stopped out somewhere, I don't know, over 155. But other than that, I'm just going to have to wait.
For someone that doesn't have a position on that if you just look at the daily chart and you just put it in front of you with the 152 level that Nour is discussing, it's very obvious that it's a very, very strong resistance over there. So eventually,
that's another thing.
Eventually, if you don't have any position between the 150.80 and 152, this is a very strong resistance level where the risk of taking a position over there would be much lower than taking a position from lower places. That's one. Second, if it breaks, you can have you don't have to be as much aggressive and taking that much risk the same way as Nour is doing, because maybe you don't have, or you're not taking the 1/10 of each trade, or you don't have that strategy implemented in your head properly. So for you can have your stop loss very tight in front of you and have a target which is around, I don't know, maybe 147, 146.
The last time we took, it gave us 1,000 pips within 3 days. 1,000 pips. Okay, it took me 3 months to wait, but I got 1,000 pips in 3 days or 2 days.
For the ones that do not have the luxury of the capital to wait.
No, but it wasn't that big of it wasn't that big of a difference, because from I think we started 146 to from 146 to 152. That's not a big, for the dollar yen, this is nothing. But would you wait 3 months to get 1,000 pips in 2 days? Most people will say no.
600 pips. That's 600 pips.
Okay, but 600, if it's on a mini lot, that's a $600. If it's on a standard lot, that's 6,000.
For a
but
$500
I took the whole position.
Or $1,000 account, that wouldn't be possible.
If you have $1,000 account, you would not be trading dollar yen.
Exactly. That's what I wanted to explain. That's why I was saying, if you don't have that strategy and the luxury,
you don't do that.
You do the 1/10 and then re-enter the market, then you can trade it in a different way. So we're trying to present different strategies where you can benefit from the same view, which is basically the the dollar yen, let's say, going down as long as we are below 152. So that one will create, your risk. The risk reward ratio would be very tight, and you can take basically your profit or your loss. Keep in mind, what we're explaining here is not just the part is we're not just trying to give like a recommendation, go and sell dollar yen, put your take profit here plus there. No, the idea is about how you build your strategy and how you start thinking about the market. This is just an example, so you know how to deal with the market. We're giving you an example based on historical data, what happened on the decision that we've made before.
True.
So it's exactly that, just to explain it and be very clear in front of everyone. So here, what we can see in front of us, just by putting the chart in front of you, so because I have it in front of me here, that's why I'm doing this. So if you put the chart in front of you, so you're going to notice that you have the triple top, right? So you have the triple top in front of you on the daily chart, and then and you can see the first top, let's say, happening in 2110 2022. You have the second top on 1/11/2023. You have the third touch on 13/11/2023, and now we've tested it again in 14 February 2024. Almost not the same levels, of course. We didn't touch the 151.90,
150,
152, but we did we did a nice touch on 150.90. So it's 100 pip lower, but we have a resistance level very obvious in front of us, plus the trend line that is going up that we broke. So the trend line that dollar yen was going up, we broke that, and we're retesting that level. The retest of that support became a resistance now. Usually, how the market interact with such historical data is bouncing back from that. The beauty of it, if you want to take a position on that, the risk-reward ratio would be in your favor. So it's going to be a very tight risk on a bigger reward, if it works. If it works, keep that in mind. So you can do both ways. You can do short-term, long-term, medium-term trading. It's up to you. The strategy can differ depending on your exposure, depending on your capital, depending on the risk that you want to take in while trading. So that's why I was suggesting the thing is we need to discuss and start talking about the trading plan. And for the ones that need a little bit more enlightenment regarding that part, they can pass by the office, or we can do a workshop, or we can have a call and explain a bit more to them so they can benefit in the best possible way. But the most important part is try to always manage your risk. That's the most important part. And don't you ever think that there's no losses while trading. Losses
it's before profits.
Literally a part of trading. You can't
definitely part of the trade.
Have an account without losses.
And you have to consider losses before even making profits.
Yes. We say define your exit before your entry.
Oh,
so
yeah, definitely.
Define your stop loss and your take profit before you enter the market. Because if you enter and then you start deciding where should I put my stop loss or take profit, that's the first mistake that you've done. You don't do that. I put my stop loss, I put my take profit, and then after that I can sleep in peace. We don't need more.
And don't change your stop loss.
Exactly. Never change that your stop loss.
Kind of never change it. But yeah, I mean, sometimes I do change it. It's not like I never, but sometimes I do at some point if there's like, if I have a strong feeling about it.
Yeah,
but fundamental,
then you're linking technical with fundamental in this case.
Yeah, definitely.
Yeah, but if you want to stick to the technical, usually you don't change it. Or let's say
90%
of the time,
usually no.
It doesn't change.
Unless if there's a fundamental thing, yes.
Yeah.
100%.
Exactly.
All right, well, I think we covered all the questions for today. I think we did. All right. Well, we're going to give another, like, we have about maybe like 4 minutes left. Well, we went out for 2 hours today.
I think so. Yeah.
Yeah, it's 5.
It's a new record.
How long is it supposed to be? Wait.
Well, man, it's always a joy. It's always a joy.
All right. Well, that's good. I mean, 2 hours, that's fine. Anyway, yes. So that was the beginning of, or that was the first podcast that we've done with SquaredFinancial, and hopefully we're going to do at least once a month now, and then hopefully we'll reach a point where we can do at least once a week or twice a week. There's, I think that's the final question. Next move on oil. Oil, I am even with whatever's happening, like in the what is it called, in the Red Sea, I still think with the weakness of the dollar, oil still might be heading a little bit, maybe a little bit higher. I would say maybe around 86 something for Brent crude. I would say maybe around 86. From the method of price versus time, I think by maybe somewhere around March, April, that would be where I think the oil is going to be somewhere around 80, 86, 87, somewhere around that area.
Talking about
Brent
WTI
crude.
or Brent?
Yeah, no, Brent, UK
Okay.
oil,
Okay.
Brent crude.
Okay.
Which, I mean, US oil will follow, but it's not just about the war as much as it's about also the demand from China, the global demand also. So far, it's still good. OPEC did not also change anything about the production, so I don't think so. They will add anything when it comes to production, but oil is a little bit. It's a good thing that we stabilized over the $72 for the past over maybe 6-7 months now. Each time. Also, I mean, that's another obvious one. Talking about being obvious, this is another obvious
things as well that related to the demand and supply and whatever is happening with
this is also obvious. That's another obvious one. I don't know why now it's not letting me. Yeah, that's another obvious one. Basically, you're talking about, that support,
right?
support.
Again.
Oh yeah, that's UK oil. Yeah,
Okay.
that's UK oil. That's another obvious one. So I think we just need to break that 83. That each time we keep just testing it, we dump down. But if we break the 83, we're going. It will most likely have another push lower, 85 and 86 and 87.
By the way, 83.
But if it goes down, I think if it's going to change, if it's going to be, if it was.
The 83 is on WTI as well, not
Oh,
just
yes.
UK. Yeah.
I think also, I mean, on the downside, if it's going to change its trends, it needs to go below 77 on the weekly. That's what I would say.
Let me add something on that. Like there are a few things that are still affecting oil as well. So everyone can understand why we are maintaining the levels where we are here despite the geopolitical tension that we have, right? So because with the geopolitical tension, especially what's happening in the Red Sea, the expectation at the beginning, and I've had that question a lot, so that's why I mentioned it. The expectation was like, oh, now we're gonna see a gap of $5-6, or we're gonna see some craziness. And
I mean, we saw like $2 gap.
Yeah, it was nothing. It was really it's a tight gap, and then it covered it in no time. So it didn't even continue. But the reason of that is a couple of things. So let's mention them quickly. One, there's no direct hits on any oil tank.
An oil tanking,
that is passing by. That's one. So as long as this is not happening, we're gonna still see
there's no need. There's no need to panic.
Exactly, no need to panic. We're not gonna see a crazy move. As long as there's no direct hit on Saudi production, or like on let's say ADNOC or whatever companies out there, then we're not gonna see any panic in the market. We're not gonna see the price of oil hiking in a fast way. Another thing as well, Iran production, it increased to 3.5 billion barrel like per day in 2023, and Biden didn't lift a finger and didn't do anything regarding that part, which as well affects all the deduction that OPEC has been doing. So keep that in mind. So okay, fine.
Well, they're buying reserves again.
But at the same time, we're having an increase in the production from the other hand. That's despite whatever's happening under the table that we're not going to discuss now. And at the same time, the demand of 1.6 million barrel per day in 2023 versus the like the production of two, and that here, it's like we can see the gap, right? Like, so the gap is still there. So we can see the demand and the supply is totally different than each other in 2023. Now we're discussing the data that we've already had, because there's no proper full view on the data of 2024 and the expectations of that. But based on that, this is how the market is pricing currently. We need a proper event that can to see the oil moving up or faster from in a faster pace or rally from here. We need one of these events to happen. Hopefully nothing is going to happen that will harm anyone, but I mean, just to clarify the geopolitical tension with the demand and supply, adding to whatever Nour is mentioning. Plus, as well, the inflation is not helping a lot, because there's no proper growth. No proper growth means no proper demand, and the demand of the machines working and the production and all these stuff. So the whole economic cycle is not still working properly as it should. And now with the UK going into recession and the expectation of the US and EU going into recession, and the inflation still didn't slow down on the pace that is requested.
Election year.
So the whole thing altogether is showing us a slow and the whole cycle of the economy. And that slowness doesn't create demand. And eventually no demand means stability, sideways, a bit of volatility between a certain level, which is exactly what Nour showed you behind on the chart. Now, to benefit and to trade oil, there are opportunities. Don't get me wrong. I'm not saying that it's going to be dead for the next few months, but what I'm saying is the beauty now is you have a better clarity if the market is going to continue jumping up and going crazy and rally from here, or you can trade the channel or the sideways move, as long as we are in that sideways, because you can either trade the trend down, either the trend up, or the sideways. Now you can trade the sideways. We didn't have a confirmation of a proper break of the trend down until this second.
Fair enough, fair and square, I think.
Yep.
All right. Well, we know at least what are we going to do next, the next episode, or
exactly.
We already called it an episode.
So we're gonna keep you guys posted. We'll let you know. I hope you guys enjoyed this session. Nour, it was a pleasure as always.
Always, same. And we'll see you guys for the next one. We'll post on social media and see what we can do. And also this podcast episode will be also on, I believe, YouTube and Instagram. If you like it, you can like it, share it, and subscribe.
And based on that, we'll do some more
to the channel. Yeah, and definitely. All righty. Thank you so much, guys, for coming today. Appreciate it, and hope this was beneficial. At least we answered all your questions. There's no more questions on the list. So we'll see you guys again next month.
Thank you.